Are AI stock overvalued? Bigger moves start from small ripples. And I'm seeing some patterns here as early as second half of 2025. I saw Microsoft, Meta peak during July and August of last year. And since then, the recent low were down 37% and 28%. And only in just the recent month, Nvidia has corrected by 20%, Alphabet 19%, Broadcom 28%, and Amazon 19%. Then in the recent days, correction have flown over to Korea. The powerhouse of semiconductor, KOSPI, corrected 24%. Is this correction over, or it is just the beginning? This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. I strongly believe AI technology can be integrated to our day-to-day living and how we conduct our businesses. And it is just at its beginning stage. There is a long runway for this new industry. However, having a correction upon the overvalue of AI stocks, it should not be unexpected or take us by surprise. And these are the top concern among investors of AI bubble. And let's take a look. On heavy capital expenditure risk, valuation risk, over-optimism, growth expectation, weak monetization, energy shock, and in my opinion, my top concern is the rising borrowing costs. But why? And let's look at the second chart here. And this is the expenditure of AI technology over the years. And in pursuing to stay ahead of each other in this AI wave, companies have been spending big. And this year alone, their capital expenditure is projected between about 600 to 700 billion dollars. So we could see here is that last year Amazon spent 131 billion, Microsoft 118 billions, Alphabet 91 billions, and Meta 72 billion. Total at 410 billion dollars. And this means that this year it is projected they have increased another 70% of last year's spending. And the bigger problem, I believe, is that with the hyperscale spending and borrowing is when interest rate remain higher or move higher. And let's take a look at the next chart here. And what is my concern? And some will say that these companies are spending on their cash reserve. However, according to the report by MarketWatch, it says that more than 460 billion in outstanding debt has been issued in the recent years by 6 major companies in the AI race. And we can see that in this chart, and what we're seeing here is the US market is performing over the years. And we can see that in 2022, this was the year when the interest rate was starting to move higher from almost 0%. So when the Fed fund rates started increasing, some meetings, if you can remember, was at 75 basis point. The entire year in 2022 for the US market, in this case, we're studying the NASDAQ, it was a bearish year. Yes, the whole entire year. We could see that the impact of a rising interest rate and the stock market is related. And let's look at what happened to the market when the interest rate increased. Let's look at this chart again. So when the interest rate is higher, it is not just going to affect the profitability of the companies as they have to pay for higher borrowing costs. The end consumer are also likely to strap on their spending, and that may affect the ROI of all these companies. Therefore, it is a valid concern that investors are worried on this weak monetization outlook. So let's look at the other factor here. And so there are signs that I'm seeing here that inflation is picking up again. On 28th of February this year, energy crisis is not just the sole culprit for high inflation. In fact, what we can see here since 2025, last year, the market or the inflation has already bottomed out, and that was before the energy crisis this year. and start moving higher from there onwards. So this is a period where energy crisis happened and today is higher. So we have to understand that when the uncertainty in the Strait of Hormuz passage that is still happening right now, inflation outlook over the near and far future, whenever there's uncertainty, I believe that inflation should continue to trend higher. And with that, I'm expecting a higher interest rate should likely to follow. So are the AI stock overvalued? So that's the key question. And I would like to stay cautious and take a pit stock from time to time with this AI race as it continue to run. It's just like the pit stop that we have discovered or discussed on the 6th of June or 7th of June. That's where at the close of the week that we saw that there was a bearish engulfing body. That is a pit stop moment. And where is it heading today? It did not break the high, but we are seeing some volatility here. And same for the Nasdaq. So that's what I mean whereby when the fundamental doesn't really gel with the price behavior, we have to take a pit stop moment from time to time. So just these 8 stock alone represents around 57% of the total market cap of Nasdaq 100. Again, the bigger moves start from smaller ripples. We are already seeing ripples from stocks to stocks and now markets to markets. Is it going to translate into a much bigger waves? If you find what I just shared is useful, please like it and save the link for future reference. And also share this link with your friends. My name is Kon Hao. I enjoy studying how different markets currently behave to uncover emerging trends, the potential trending markets of tomorrow. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that stay through this tutorial. You have many great trading weeks ahead.